Hello, Jeremy.
High impact outcomes coming at you live.
I would like to say it's good to see you again, but that would be like I haven't seen you for a while. So, but it is good seeing you again.
You too, always. Yeah, we're right. Earlier today on the phone, going through a bunch of business stuff and, always growing. And yep, and if we don't go a day or we go a day, it seems like too long, doesn't it?
You get the itch.
Yes.
Your beautiful bride mentioned something about snow again. You don't have snow still, do you?
We're getting some. We get it. What was it? A little snowing outside, just it's not sticking, but kind of snowing. We'll see.
I'll tell you what, I'm over the snow. Uh, for the people just clicking on here, we're going to get cranking in a minute. A little small talk and warming up. Obviously, Jeremy, I live just north of Philadelphia, and we got a little snow this year for this area. Michigan
Yeah.
boys, I'm used to the snow, but I burned into California over the weekend to see my son, and I got a couple rounds of golf in over the weekend, which was really, really nice. Haven't done that in a long time. And a good friend of mine, his name's Wade, he flew in from the Chicago area, and he was talking a bunch of smack about how he's going to kick my butt in golf because I haven't golfed in probably 2.5 years. And I'm proud to say, Mr. Isles, that I showed him what's up.
Represented, yes.
Represented, baby.
Nice.
Hello, everybody, and welcome. It is 2002, Wednesday, March 24th. Speaking of Wade, today's his birthday. That's one of the reasons why we shout out for a few days. I hope
Nice.
everyone is doing fantastic. You're warm, you're safe, you're cozy, you're comfortable, but you're also growing and excelling. One of the reasons that we take a little bit of time and do these webinars is we enjoy doing our giving back piece and also getting other people excited about real estate investing. Some of you are new, some of you are not so new, some of you may need a reboot, some of you noticed that 2020 was a historical time for real estate investing and you want to jump in. So what I want to do right now, if you would humor me for a minute, once again, my name's Tony, my partner Jeremy on the other side, what? In the questions area, it may look like a chat box to you, or it may look like a questions block, but go into the questions area, depending on what type of device you're on, and give us a shout out. Let us know that you're here and where you are webinaring in from, wherever you're connecting from. Let us know, and I want to track that and say hello to everybody. Boom, keep it coming. Good. People are clicking in here, and and also this is what else I want you to do. Say hello, and I see Andrew and Brian and Maritime and a bunch of other ones on here. But as you go through, let me know where you're from. But also, I'd like to know what your level of investing is and what you're doing. So a little small chat. Let us know what you're doing, where you're doing it, what you're interested in. One of the cool things that we do on here each week is we go over this kind of thing, and we always try to find out what people want. We never like to make the assumption that we know what you need. So we'd like to know what you're looking for. And as always, throughout the duration of the webinar, anytime that you have a question, post it up in the questions area, and we will be doing a Q&A session live at the end. So if there's anything that you have questions about, please put it up there, and we'll be covering it. Sometimes if we have enough time, we'll do it as we go through, but a lot of times what we'll do is just kind of save it at the end and then go for it. Hello, Andrew from New Jersey. All right, I tell you, you're just your next door neighbor. I'm just north of Philadelphia, and you have one flip under your belt. Nicely done. Are you doing another one? What do you plan on doing next, Andrew? Just let me know if you plan on doing more flips. Are you doing any wholesaling? Do you like cash flow? We're going to be talking about cash flow next week. Tonight is part 2 of our money series. Last week, Jeremy dove into, just pretty much, I just had a brain fart, Jeremy.
The first part of it, finding the money, or not finding the money, but how to do no money down deals. So
that's exactly what I was going to say, was finding the money. I'm like, no, that's what we're talking about tonight. So last week we talked about no money down deals. Oh, that cracks me up. I am over 30, Jeremy. So I get one of those every now and then. Tonight we're going to be talking about finding the money. Jeremy has a nice little clip that he has prepared for you. And of course, once again, we're going to be doing some Q&As throughout and especially at the end. Speaking of money, some of you are used to private money lending. Some of you are used to hard money lending. Jeremy's going to be covering some of that tonight. And if you have questions as we go through, please let us know. But I will tell you this, for those of you that have been in this space longer than a few months and you understand a little bit about real estate, one thing that I will tell you is there is absolutely no shortages or shortage of funds right now. There is money everywhere. Jeremy and I talk to people on a, I was going to say a weekly basis, but probably every other day we're having a conversation with either one of our students or internal to our mastermind group, and we talk about money, finding money, where to get it, how to get it. And a lot of people get very intimidated when it comes to money, just talking about it. And one thing that you got to make sure that you're doing, regardless of you're just starting out or maybe you're in that intermediate level and you're trying to expand, get comfortable talking about money, okay? You have to get comfortable talking about money because it's, first of all, that's what business is all about. There's absolutely nothing wrong with it. There's everything right with it. And the more reps that you get in, the more comfortable that you are with it. Just like anything else, business, especially in real estate, the more people that you're around and you're talking about money, the quicker you're going to be able to snap into terms, understand what it looks like, understand the differences between some of the groups that we're going to be talking about tonight. And ultimately, you have to get started, okay? That's something that we always say, whether you do anything with us, you're on our weekly webinars, or you're doing something different with us, or whatever it is, we just encourage you to get started. Last year was a significant year in real estate. 2020 just, I know it was very tough on a lot of people, but many real estate investors made a lot of money last year in real estate, and 2021 is shaping up to be another banner year. There's plenty of opportunity, there's plenty of money, and what you need to make sure that you're doing is focusing on developing your plan, get it going, and get started in this business. Lewis and Andrew, oh good, okay, great. I'm seeing some of the comments come in here. I'm going to pass it over to my boy Jeremy in just a second. And one thing too that I want to talk about just real quick is hard money lending. How much are you going to hit hard money lending tonight, Jeremy?
A little bit, not much. Yeah,
okay.
Just a little bit.
So, and the reason why I mentioned that is because hard money lending, sometimes people get real nervous when you say hard money lending or hard money lender, and people get very intimidated once again about that type of lending institution. And I tell you, we have a number of friends that are hard money lenders. We know we've worked with dozens of hard money lenders. In fact, one hard money lender, his name is Chief, his daughter and his son, he asked if we would train them in this space because he didn't want to pick up on the beginning level, getting them going, talking about rehab budgets and finding property. He just wasn't into that. And not only was he into that, if you're a parent like I am, like Jeremy is, you understand too that sometimes when you try to teach your kids a professional trade, it doesn't go so well. So he's a smart man. He goes, hey, I would like you guys to train my kids. I'll take care of the money part, but can you help them out? First of all, what a great privilege and honor that was. You know, you have a guy that's done quite well, featured on national television, and asked us to train their kids, which was a pleasure of ours. But the reason why I mention that is don't be afraid to pick up the phone and just make a call and talk to somebody. And if you're in a deal and you need money, don't freak out. Just call somebody and start talking to them about it and see if they can help you. That's where it starts a lot of times, is just getting over that initial fear on what people are going to say. And you know what? In real estate, you're going to hear some no's. You're going to have some doors close, and you're going to have some ups and downs. That's just the way it is. But it doesn't have to be crazy ups or downs, right? Because what we like to do is have a nice moderate level growth, a pattern. We don't want you to fall. We don't want you to get hurt. That's why we do these webinars, just to answer a bunch of questions and try to help people really develop their plan and get started. So as you're going along here and you don't know how to get started, if you have some questions doing that, please let us know. Andrew, I tell you what, because we're on this right now, Andrew has a number of comments in here. I love it. I feel like we're having a one-on-one here, Andrew. I dig it. His question was, should we stick with one hard money lender or try others? You want to shop around a little bit, but that's going to be determined. I tell you one thing that early on, very early on, when I first got started, I linked up with my first hard money lender. His name's Bob Green. I tell you, he was phenomenal and he was hard to beat, but I shopped it around and I looked, and it's not always about rates. It's about customer service. It's about how they react to you. It's how they interact with you. It's not just the difference between points and interest, I'll tell you that, but I would encourage you to talk to more than one. And, because it's a different perspective as well, Andrew, and every single one of them there's a lot of similarities, but there's also, a few differences. Some will lend more, some will lend less, some will lend on credit, some will lend on the deal. So you really want to bounce that around a little bit and do some research. Okay, what I'm going to do right now is I am going to pass it over to my wonderful buddy and partner, Mr. Jeremy Iles. Tonight, we're going to talk about finding money. And again, if you have any questions as we go through here, we like to keep this nice and tight, about 40, 45, 50 minutes, and then boom, we're all done. So load up your questions, hit us with your best shot, and give a big round of applause for Mr. Jeremy Iles. What?
Thank you, Captain America. Some of you guys may not know this, right? Drill instructor, that's why his voice is a little raspy, and I love it that he's in. I always tell people this, I call it his bunker, but Tony's like, hey, people may think I truly live in a bunker, and I always joke, right, me being from Montana, that would be more fitting, because we've had a few of those people out here in this area, and these neck of the woods, as they like to say, right? I love the bunker.
The bunker. Hey, it's always been the bunker. That's what happens when you're in the Marine Corps for 20 years. It's funny, Jeremy, in 2 months, I will have been retired for 15 years.
Wow.
Unbelievable.
Wow. Yeah, appreciate your service, 20 years in there. And what do they say? Once a Marine? I forget how it goes.
Let me see. 100% always. Hey, have fun. Go get them, man.
Thank you, Captain America. Can you see my screen?
Yes, I can.
Awesome, great. Let me minimize this here a little bit more and we'll jump right in. We got a lot to cover tonight, and respect your time and our time too. So let's get to it. I'm just gonna move something around here a little bit so I have a little easier windows to see. Okay, and yeah, welcome everyone. I see you guys jumping in, and different people jumping in from all over the place. Remember, if you want to comment or say anything, it's in the questions box, not the chat box. So questions, let us know where you're from, where you're in, what your level of experience is, or why you're here. Yep, I got some exciting things. If you saw my Facebook post or Instagram post, I said how to raise $1 million in capital in 1 week. And I mean that, I truly mean that, and I'll show you how we can do that. So last week, let's recap real fast. I always like to recap old biz, new biz, and that's something Tony kind of taught me, and I love that when I've been training and coaching people for years. So yes, no money down deals, are they possible? And the answer is absolutely they are. Of course they are. We're finding them. You just have to know how to go about it. And last week, that's what we covered. We covered how to do them on wholesale deals, how to do them with fix and flip deals, how to do them with cash flow deals, monthly cash flow plus equity deals. And I talked about some of the dollar amounts for each one and that you can make on each one. Last week too, I talked about no money down deals like a subject to. So buying a property subject to the existing mortgage. So fun topic there. That's a great one. That's actually our favorite generally as investors. If you can find a seller that's willing to finance the deal for you or just take over their mortgage, those are great. Those are our favorite for sure. And then I talked about traditional fix and flips, how you can do those deals still with no money down. And let's see here. Yep, so we went through all three of these examples of how to do that. And example A, B, let's cover this. And this is recap last week. So I talked about if you're doing example A, there's the seller, and then you have a cash partner, then there'd be you, the investor. So that's how you kind of do that with no money down. Your cash partner would come in and fund the deal if they're doing like a subject to, because you need to repair it to be able to sell it. And this kind of example that we talked about, and this is a common one that you'll see if you put enough time in on this, you're gonna stumble across some of those. And example B is more common though, that we'll see whenever you're starting off, and that is you'll have a seller, but instead of just having a cash partner, you're having a hard money lender involved. And a hard money lender, like Tony was talking about, they'll generally lend you 80–90% of the money you need. Well, you're short some money, aren't you? Right? And what do we call that gap that you need? Well, let's you know, the 10 to 20%. Well, if a partner comes in and helps you with that, a lot of times they're called a gap partner. So gap is not like initials or acronym for something. It just means they fill the gap, the void, the balance that you need. And so the fourth person, you, the investor, you can do the deal with zero money out of pocket. And so this is how people are doing it today, right now. This is how they've been doing it for years. This is how they'll continue to do it for years. And there's other avenues too. Which one do we like better? I like example A better if I don't have to use the hard money. And next week, when we talk about some cash flow properties and stuff, you're going to see that we'll do more example A. So you can still do it with zero money out of pocket next week on those deals. So that was kind of recap, and let's talk about the numbers just real quickly again, kind of anchoring it in. So if your purchase price is 100 and your rehab, right, you got to remodel the house, do some value add is what we call it, add a bathroom, you know, paint, open up the kitchen, new kitchen cabinets, new appliances, the bathroom's going to need to be updated, right? The doors, or those old brown doors, don't cut it. You know, the curb appeal, right? Maybe new windows, new roof, whatever it may be. And the rehab, is it going to vary? Of course, right? That's called your scope of work. But in this example, let's say 50,000. So the total you need is 150, right? For purchase and rehab. And are there other, you know, miscellaneous numbers? Absolutely. But let's stay big picture with me here for a minute. So your purchase plus rehab, you need 150,000. If the HML, so when you see that term, that means hard money lender, they lend you 80% of the purchase, 80% of the rehab. So they'll lend you 80% of this, 80% of this. In essence, they'll lend you 80% of the 150, right? Is kind of what they're saying. And why did I just not say 80%? Because a lot of hard money lenders may lend you 80 or 90% of the purchase and 100% of the rehab, or 80% of the purchase and 100% of the rehab. And that's why these numbers need to be separate. You guys follow me on that? So 80%. So 150,000, right? So we multiply it by 80%. That equals, they'll lend us 120,000. Well, we're short 30,000, aren't we, right? Well, we need 30 grand. That's where we can have a gap partner come in, or equity partner, whatever it may be. And that's kind of the quick numbers. And let's talk about the two kind of partners that can come in. One is called a debt investor, which they'll lend you just a fixed interest rate. Meaning right now, if you got a loan from a bank on a house, those are more debt investors. They're giving you, you know, really cheap interest rate, 3.1175 or something on a 30-year. That's a debt, that's a fixed interest rate, right? It's kind of locked in, right? Why did everyone refinance here recently? Almost everyone refinanced, or people are buying houses. They want to lock in that low interest rate, don't we? And the other avenue that we can still have, I'm not just talking a regular house, we're talking investment properties. You can still get debt investors that will come in and lend, not or like a bank, but not a bank. So two separate things, but still lend you money at a fixed interest rate. They want to make 6% return on their money, or 8% return on their money, or whatever it is, 10%, just a fixed interest rate. The other avenue, which is really common if you're doing no money down deals, is an equity investor. And why is there a piece of the pie over here? Well, that's exactly what they're going to want. So if your profit is 50,000 and you split it with them 50-50, right? They're cutting that pie in half, aren't they? Yep. So you're getting 50% of the profit. They get 50% of the profit, and you'll hear those called equity investors. And when you're starting off, you're going to start with equity investors, but you want to transition to cheaper money, don't we? So that would be the other avenue. So finding the money, right? So here we go. I took this picture at Tony's house last time I was over there, Coach Tony, and here we go, got that photo. And so there's the hard money lender, right, will lend you 80-90% of the money. The cash partner's gonna come in and lend you the 10 to 20%. We're gonna talk about where do we find the cash partner and the hard money lenders. Now, where do we find hard money lenders? Let's talk about that one first. So some of you are brand new on here. Some of you don't even really aren't familiar with what hard money is or how it works. A hard money lender is just for fix and flip investors or for real estate investors. We love them because they're the only reason why they're involved in anything in this business is for us. They only really lend to real estate investors. So banks won't touch our properties because the properties are too dilapidated. They need work. They're not move-in ready. They're not, they wouldn't pass inspection. Well, when people think about this as investors, when people run away from problems, we run to them. That's how we make money. A restaurant, if nobody was hungry, a restaurant's not in business, are they? So we, just like that, we got to solve a need. And our need is what? In this situation, people need housing, especially now more than ever. And so hard money lenders will lend you the majority of them. How do you find them? You just Google, I'm really tough guys, right? Google hard money lenders. I try to type in HML, because that's what every investor uses, the short terms, but it doesn't work. You have to type in hard money lender and then just whatever state you're in or whatever city you're in, because some of them only lend in that city, or they may lend in that state, or some of them lend in 10 states or 12 states. Some of them will lend in all 50 states. Like Tony mentioned, how cool is that with that hard money lender, asking us to train the students. So do we get better? Can we help you negotiate and try to get some better rates and stuff? Yes, or we can kind of guide you to ones that we've seen that will lend better, and we'll warn you about some too to stay away from. And we would tell all of you, because collectively, that's how we all learn. So if we have a student or investor that's ran across a hard money lender and they were nothing but problems and they couldn't close and some bad things, we kind of put them on a warning list. So we keep an eye out for them and warn other people about them. So again, the power of the unity, the power of a group. So Google hard money lenders in that state, and like Andrew and Lewis, I saw you guys are on here. Awesome. Good to hear from you guys again. And shop around, because they do vary quite a bit. And I've seen it where one investor, before I flew out and trained them, they had one hard money lender, and we plugged in the numbers and ran it with a different hard money lender, and the difference in cost was $6,000. Is it worth shopping around? When is the last time you picked up the phone just by calling something and you saved yourself $6,000? So absolutely worth it. So and hard money lenders, and in my Facebook thing, I kind of threw out the challenge and high impact outcomes, or Instagram, of saying you can raise $1 million in capital in a week. Well, hard money lenders will lend you 80 to 90% of that, won't they? So you just need a gap partner to lend you the other part, and we're going to dive into that. But that's how you find hard money lenders. Google them in that state, and any state you're going to find. I don't know, like in Texas, I think I have 30 on my list. In Florida, I probably have 20 on my list. And can I have California again? You probably have 30 just like that. And just by Google hard money lenders in California. Now, some of them only lend Southern California, right? It's because it's so hot. Southern, Central California, and Northern California is like a different state. So some of them don't lend up there. And then you want to find some other hard money lenders that do. I've never ran across a state where I couldn't find hard money lenders. Never have. You name it, Louisiana to Detroit, right? Michigan. So they will lend in those areas too, from Alaska to Hawaii, you name it, they'll lend. And put yourself in a hard money lender's shoes. They want to lend their money out. If they're not lending it out, they're not making money. And we've had, Tony and I have like 16 different ones that offered to like throw us kickbacks for, brokering deals, or for us to kind of be hard money lenders. And you know what advice we give all of our students? Do what's best for you, right? Not because this one does this or that. Yeah, if you like Chief Denny, use him, right? If you like, Merchants Mortgage, if you like Alpha Funding, if you like, Lima One, if you like any of those ones, do what's best for you. And like Tony said, personality and how are they to deal with. Next, this is a great one. I love this topic here. So funding. If lack of funding is the main reason from keeping you from being successful, Let's say that's holding you back in your real estate investing career, and you're like, Jeremy, I wanted to do this for years. I've seen the TV shows. I've watched Flip This House and, you know, Fix It, Flip It, whatever, list it, you name it. There's 40 different ones out there. So it glamorized it, and you guys know those are reality TV. Those are not what happens on a true fix and flip. They're not. I know many of the people personally that have been on there. I think I know 4, 5, 6, 7 people that have been on those shows. It's reality TV. It's not real. It's staged. It's set up. And but the point is, what's neat is it's fun to watch some of that. Take the before and after. I love on my houses seeing the before and afters. I love taking that piece of crap house that smells and stinks and turn it into a beautiful wow. Right? That kitchen from, oh my gosh, you know, this kitchen's not even a kitchen, right? It's cabinets busted or missing, and you know, it's closed off. It's a galley kitchen, and open it up and having a beautiful island in. Awesome. But if lack of funding is holding you back from getting started, and you've been wanting to do this, or maybe you're at a different level, you've done some, but you need more capital or whatever it may be, what's stopping you from going out there and raising money for your deals? So this is a question Tony and I have asked hundreds, if not thousands. I would say thousands, but I want to be impeccable with my word. And we always get the top 3 reasons. So think about it. Money's holding you back. What's stopping you from raising money? Number 1, I don't know where to start, or I don't know what I should say. Kind of the number one reason we hear. I don't know where to start. I put yourself, if you're brand new, and if you're not brand new, put yourself in that situation, right? I don't know where to start. I don't know what I should say. And let me tell you, if you mess up and say something wrong, as a coach, I can't help it. I'm going to say, you know what? Good job. You messed up. You tried it. I will praise somebody. My son, he's 15 years old. If he goes out there and makes a mistake, but he tries something, I'll take that any day over him not trying. So if you guys are doing that, don't beat yourself up on that. And do you know how many students I've had to coach and help, and I kind of give them kudos on that? We had one the other day, a neat gentleman in Southern California, San Diego, and he was working on getting $1 million, and he kind of messed up a couple sayings on it, and he was going to have a private money lenders that were going to give him $1 million for any fix and flips he wanted to do in Texas, because $1 million in San Diego doesn't go too far, does it? $1 million in Texas, you can go pretty far with that. And what did I do? We coached them and covered, say this, find out what they want, but where to start. So let me keep going here, because I can talk about money for days, and I do. So number 2, the second biggest reason we hear is I don't know anyone with any money. I don't know anyone with the money. Maybe that's you. Let me share a statistic with you. Now, this statistic I got out of was from another investor person who just, her thing was raising money. That was all she really did for some big money. And she said this: there was 347 billion with a B, Bravo, raised to invest in companies across the U.S. And that was last year, and that was even a couple of years ago, a few years ago. $347 billion to invest in companies across the U.S. Somebody has got some money. You don't need 347 billion. You just need enough for one deal, don't you? Once you get one deal, you'll see the success attracts more success. So if you don't know anybody with money, I bet you do. Yeah, but these are the top 3 reasons here. And the third one, I don't know how to structure the deal. And that one I do get, right? If you don't know how to structure it, you know, again, that can hold you back, and I don't blame you. You don't want to make any mistakes, especially with somebody else's money. You don't want to do anything right, and you're not sure of the numbers, what you can afford to pay. And again, makes sense, right? So those are the top 3 reasons. So if one of those are holding you back, let's jump in on them. What I've noticed is if you can do one thing that's going to help you raise money easier than anyone else, and that is credibility. Having credibility is the quality of being trusted or believable. Have the quality of being trusted or believable. All right, what's a synonym? Yeah, synonym. So synonym of credibility, right? Integrity, character, reliable, dependable. When I think of those attributes, I'll say Coach Tony, you know, obviously Chief Warrant Officer Rosenbaum, you know, awesome partner, but man, he exudes those. Yeah, I've never seen somebody with more integrity, character, you know, like I said, dependable. Absolutely right. He in business, him and I are business partners, and I know I'm going to carry my weight. You know what I want my partner to do? Carry their weight. And think about this. Why am I talking about this? Again, raising money. So if Tony and I were, Coach Tony and I were going to try to have somebody, partner with us, we would expect them to carry their own weight because we're going to do what we say, and that's attractive though. That attracts money to us because people know we say what we're going to do, and we don't take it lightly. So some steps on credibility are things to do that 5 steps to inspire credibility. Let me word it that way. So number 1, find a good deal. You need to be knowledgeable, because if you don't know if it's a good deal or not, I know I couldn't in good conscience talk to somebody about funding a deal if I didn't know it was good, if I wasn't confident, if I didn't know without a doubt, hey, this is a solid deal. Here's why. I've done this. I've done all these checklists to know it's a good deal. So get the knowledge, learn it. And you guys are here on this webinar. You're learning more knowledge, right? So kudos to you. You guys are on your way. Number 2. Be professional, right? And look and sound professional. Be careful on your emails, your Facebook pages, all those sites, how you talk, be professional. Does that mean you have to wear a suit? No, Tony went from boots to suits, and and I don't see him in suits much anymore because we don't need to in business. If we're meeting somebody and had to, sure. But I'm not saying look professional as you need to have a suit and tie all the time. No, we're real people. Yep, I'm a big fan of transparency, but you got to still be professional. And you got to put on that hat. Next, and your Facebook page, your email signature, company name, setting up some of those will really help you. Business cards, all of those little things. What does your voicemail sound like right now on your phone? And those of you that are in business and you don't have a voicemail set up yet, again, that's going to hurt you with some people reaching out to you, because people are skeptical in today's world, and they should be. I really think be skeptical, because unfortunately, there's some scammers out there. So number 3, you better protect their capital. Absolutely better protect their capital. So we put them on, we partner with them a lot of times and do that joint venture. Remember that piece of the pie photo I showed? So you're part owner of the property, they're part owner of it, and that's a great way to protect their capital. One of the steps to protect it, there's lots of, by getting your knowledge up, it helps you protect it. The more knowledge I get, the safer I am investing. Right? Wouldn't you guys agree? Right? The more knowledge you are, the more you've done it. Right, get a black belt in real estate. Number 4, build and document your track record. As you do those deals, Andrew and Lewis were talking about them because they mentioned something in the beginning about starting doing a flip. Well, great, document that, put it down. People want to see, what have you done in the past? And those of you that are brand new, well, you don't have that yet, but that's something you're going to want to do. Build and document it. Number 5, communication and build the relationship. Communication is absolutely key. Even in this deal, if you did not make a home run on your first fix and flip or cash flow property or something, but you just follow through every single step, you dotted the I's, you crossed the T's, you manage your contractors, you did all these things, and now it's the next deal. And that partner is that partner going to want to partner with you again if you took good care of them? And the answer is absolutely. But if you're not communicating with them, if you ghost them, if you do anything like that, nope. Right? Even if they got their money and stuff, they're going to be like, I don't know. I kind of got some red flags. So be careful on that one. And you can find out, I did write more about this in one of our blogs on our Facebook page. You can read more about some of the credibility things and things you can do to help yourself. Yep, I like this one. Credibility is your best currency. With it, you are solvent. Without it, you're bankrupt. Yep, if you don't have credibility. We've all talked, somebody's all pitched us on an ideal before, haven't they? And it sounds too good to be true or something. And if the person's kind of a shady person, I just dismiss it, right? Next, not even moving on, because of why? Their credibility. So even if it sounds like a super no-brainer, it didn't sound shady at all. Let's say the deal sounded phenomenal, but the person's credibility was not good. Next, right, I'm not going to touch it. Yeah. Again, the key is buy it right. Coach Tony and I always start with the end number. And the end number, whenever you're doing real estate investing, is ARV, or your after repair value. So what we do is we start with the end, right? Reverse kind of engineer it. So as any investor, I know some of you are brand new on here, some of you are seasoned, some of you are kind of in between. After repair value, then we subtract our rehab. And I'm going to just break it down this way. There's other ways of doing this. This is just one example of how to break it down. You can do ARV times 0.7. Right, 70% rule, and then minus your rehab, and there's your offer. I'm going to break it down a little more. So after repair value, so if it's 300,000, right, you subtract your rehab, your closing cost, When you buy it, your closing cost when you sell it, your closing cost when you buy it is around 2% of your after repair value. Your closing cost when you sell it would be around 7% of, again, this closing cost when you buy it is 2% of the purchase price. And closing cost when you sell it is around 7% of the after repair value. So the cost of money, you got to calculate that, because if you're using a hard money lender, right, you can, there might be 10,000, 15,000 that you're paying the cost of money. That's something we would have to subtract from this, wouldn't we? And then taxes, utilities, and insurance. And then the last one, but not least, you got to subtract your profit, how much you want to make on the deal. So those are kind of your costs broken down. There's a couple little miscellaneous things in there, but those are kind of your big ones. And you subtract that, and then that's your offer. So you got to buy it right. If you're off on these numbers, and I see people all the time that are off on their rehab, or they forgot to calculate, some of their numbers right. And wow, so now, yep, you bought a house, doesn't mean it's a good deal. I've even seen hard money lenders lend money on deals that, maybe weren't that great. So you got to know these numbers. And if you're talking to any private partner, the more knowledge you have, right, the easier it's going to be to break this down for them and know the deal is absolutely safe. And knowledge, right? Math is math. Where can we find money? Right, everywhere. But give me some live examples. I want practical examples, and I'm just going to hit some of the highlight ones, but I want to cover them with you. Right now with pandemic and people aren't meeting, and some of the real estate investor groups aren't meeting like they used to right now, and maybe hopefully those things will get back to normal, and we'll be able to meet and go do stuff again, and travel a little more, and just things open up easier. But online is a phenomenal place. So number one place I would tell you to search online. You can post it on your own Facebook page. A lot of you are like, well, but Jeremy, I'm new to real estate. That's not really going to help me. It's not a great place. Okay, well, guess what you do? You join other Facebook groups. You join other Facebook groups. And I would go live here, but just time and everything, I want to be courteous and aware of that. Facebook groups, like if you're looking in Memphis, type in Memphis real estate, right? Memphis real estate investors. If you're in Houston, Houston real estate investors, and you'll see probably 4 or so Facebook groups right there, and they will have thousands and thousands of people. Again, can you find one person that would partner with you on the deal? Absolutely. Now, it's hard to kind of line up all the money before you have a deal. Can you do it? Yes. It's trickier though. It's like turning a parked car. It's hard to steer a parked car. Get some momentum. It's a heck of a lot easier. So once you have a deal, something tangible, you can go on Instagram, right? LinkedIn is a great resource. So if you're not on LinkedIn or don't have that page, set it up. Great resource. You'll find more professionals there. YouTube. You can find, if you're out of property and recording stuff, you can build your business that way. Record your flip as you go through it. All of those things are great resources to help you draw people into you. Craigslist, you can do a search under financial, or better yet, run an ad on Craigslist. Those of you that think Craigslist is a scam, it's not a scam. Are there scammers on it? Yes. Are there scammers on Facebook and every site? The answer is, of course there are. You can meet them face to face and they can be a scammer. That's why the more knowledge you have, the safer you're going to be. On your Facebook too, you can do Facebook, Marketplace. You can find deals there. You can find money there. Again, see, there's so many resources, and I'll have probably my #1 resource for students that I'm working with, or that I've found money for deals, is on Facebook page right now. Facebook, one of the other sites, one of the things, go to our site, follow us, do that, and that way people want to be around other people, like people that are other investors. Second top choice is local investor clubs, meetup groups. Those are phenomenal whenever they're meeting. When they're not meeting, again, you can join them online. And they're doing, I know meetups are doing webinars now, just like what we're doing right here. And people can network, meet with them, exchange emails. Number 3, make of all the list of people. Here's another tip. Of all the people that have left their job, either downsized, laid off, retired, and if they had a retirement account with that company, they can roll that money over to a self-directed IRA. And if you can give them a better return on their money, why would they not partner with you? So how many people do you know, start thinking of that list, that have left a job, switched jobs, or, maybe they switched jobs a while ago, and, 5 years ago, and they still had money in that old IRA account or 401k, they can roll that over and use that to buy real estate. And maybe you didn't know that about your own funds. You can use your own funds to Be your own gap partner. You don't have to have an outside partner do it. Some hard money lenders will loan, number 4, some hard money lenders will loan money on the HML side of it too. So they'll lend you the 80–90%, but there's some that I know that will even lend you money on the equity side. So how cool is that? So you really one-stop shop. I want to put all my eggs in one basket, because what if they can't or don't? Again, you need to find other deals. Fifth, when you have a deal under contract, right? If we're coaching you or mentoring you, or some of the students that we interview to coach one-on-one or coach in a group setting, we always say, ask us, because we have, Tony and I will have people that say, man, that will just say, hey, I have a $500,000 I want to invest in real estate, right? I have $1 million here. I have one person that says he has 2–3 million and he needs more deals to put it into. So we have different investors all the time, that want to partner if you have the deal. Number 5, money's truly everywhere. It is churches, gyms, at the gym, airplanes, at a wedding, friends tell their friends, all those places at church. I won't forget one investor friend, that's how she found a lot of her investors, just people, there at church also that she knows, that they trust each other. And so that was a great resource. At the gym, I've ran across people there that, have money and want to partner with deals. So when I was brand new, I had 0 money. My credit wasn't the best, so I had to find money for my deals, and I raised over, I think about within the first year, $2–3 million worth of properties. About equity, $2–3 million of loans, whether that's private money lenders or hard money lenders, in the first year. So money's everywhere. You just have to let people know what you're doing. You got to build your knowledge up first. The 6th one, right, courthouse steps. Whenever they auction off properties, who goes and buys them at the courthouse steps, right? Investors. So you can find some people there, real estate attorneys, financial advisors, planners, again, money everywhere. So I wanted to hit a few highlight ones there and let you know that could you raise $1 million in a week? Yes, absolutely, because hard money lenders, remember, will lend you the majority of it. Join some Facebook groups, post some stuff, you'll be shocked at how easy money is. Kind of one more thing here, I encourage everyone to do is be specific. If you're saying, if they ask you a question on what do you do, or what do you invest in, and you hem and haw, it doesn't sound confident, does it? So I like to just be very blunt and let them know we invest in single family properties to fix and flip in class B and C neighborhoods in Houston, Texas. We only invest in areas where they will sell quickly after we rehab them. We purchase them for 40 to 60 cents on the dollar. We then rehab them up to 70 cents on the dollar. Then we list it on the MLS, and after paying commissions and closing costs, we split the profit with our partners 50-50. So we're buying all the houses. And you may think 40 to 60 cents on the dollar is not happening. It is, but here's the misunderstanding you might be thinking. And if you're thinking BS or Bravo Sierra on this, here's the disconnect. We're not buying them 40 to 60 cents on what they're listed at right now. Right? The list is, if they want 100,000 for it, I'm not buying them for 40,000 if they want 100,000, right? But if they want 100,000, I might offer them 90, 95 because it's worth 200,000 once I fix it up. So if I offer 95, or let's say, if I offer 100,000 even, and it's worth 200 fixed up, I'm buying it 50 cents on the dollar of what it's worth once I fix it up. So that's how we're finding these deals. And yes, we're finding them every day. These deals every day, whether the market's up, down. Is it easier to find in different markets? Absolutely. Different cities, of course. Is every lake the same for fishing? Nope. So there's money everywhere. And I love this quote by Steve Martin: "Be so good they can't ignore you." Tony and I were talking about this just the other day. If you want to become more in life, right? You want more opportunities. You have to become more yourself. And again, there's Tony's bunker basement photo there. But you can find money everywhere. Follow us on Facebook, Instagram. You want to find other people like-minded that are maybe have money and want to partner with you. And if you have any questions, right, you can call us. There's our 833 number. We'll give you that again. And our email, success@highimpactoutcomes.
Thank you for putting that up, Jeremy. By the way, that slide right there. Just to go back to what Jeremy mentioned about linking up with us. If you want to chat with us and see how we can help promote your business, move your business forward, move the needle forward, as we like to say, let us know. You see the details in front of you. Give us a call. set up an appointment, shoot us an email, and we'd be happy to reach out to you. We are active investors. We train full-time as well. So, and then of course we have our own families that we take good care of. So if we don't get back to you right away, give us a minute and we certainly will do that. We know everyone's busy. And thanks for joining us tonight. Let's see, Jeremy, as I'm going through the questions, I am brand new. I've never done anything in real estate. What's my first step?
Yeah, good question. Yeah,
You want to take it or you want me to?
you go ahead. I'll let you, brother.
No, look, I love it. You were already in the zone. Go ahead.
Yeah, I was just going to say, first step is you need to get some knowledge, because if you don't know what direction you're going, I think jumping in a car and just driving somewhere. Well, what if you're going the wrong direction? What if that's not the best for you? What if you don't like it? But you do need to take action. So there's that knowledge. It's earn as you learn, right? So you don't want to just sit back and, some people have that personality, and Tony and I know these people well, that they want to analyze, right? Paralysis by analysis, and they never take action. Well, there's those people. Those people we're going to say, hey, we're going to push you to take action. Some of the other people are fire, ready, aim. Well, again, we're going to make sure we aim some there and, get ready, prep it a little bit. And so you're not just doing blind, pulling that trigger with your eyes, spraying and praying, right? We want to be careful there. You'll burn out too many relationships.
I tell you, when I first started doing this, some of you or that are on here have been with us for a little bit. I was on active duty when I started in real estate, and it kind of freaked me out a little bit, to be quite honest with you, because it was brand new. It was very different than what I was doing in the Marine Corps. I didn't feel like I had enough control on it that I normally do, but like anything else, that just comes with time and getting your repetitions in one more time and doing it again and learning and doing. Some of you have had prior training, some of you have not. I will tell you this, don't jump into a deal, but understand what it looks like and how it's done. Finding deals, there's a number of ways you can find deals. There's a number of ways you can fund deals. There's a number of ways that you can make money on deals. So a lot of people think, oh, I gotta do this particular strategy. Whether it's flipping a property, you can do a paper flip on a property. You can do a brick and mortar fix and flip on a property. You can do cash flow, which is absolutely phenomenal. And again, you don't need a bunch of money to do any of those things. Does it take money? Do you need money to do real estate? Yes, but it doesn't necessarily have to be yours, or it could be something very, very minimum, such as a wholesale deal. So what happens to a lot of people, and initially this happened to me because I wasn't interested in it at all, only because I didn't really know much about it. I just kind of stayed away from it. I didn't have anybody that was in that space, no background in it, family-wise, friend-wise, and a friend kind of mentored me through it. And then I started digging it, met some great people, started doing some wonderful things, flip properties all over the country. And I had a lot of fun doing it. And now the cool thing is sometimes you start in a particular area and then you go in a different direction. I link people together now. I put people with money together with people that are finding deals. So that makes it a lot of fun, and it expands your depth in real estate as well. Because I know some people that are I just want to do a fix and flip and I want to do it here. And sometimes you say, I want to do it here in your backyard. And sometimes that doesn't work because of your location. So you need to go somewhere else. So I agree with Jeremy, get that knowledge base going, but without a doubt, take that full 30-inch step forward and make something happen. This year's going to be, nobody has a crystal ball, right? Nobody does. Nobody would have thought in a million years of what happened last year, right around this time, right? About 13 months ago with the pandemic and everything else going, nobody would have thought that. But I tell you, a lot of people wish they would have thought about that earlier. I know Jeremy always makes a reference to, what if you would have done this 5 years ago? Where would you be now? What if you would have started this, 2 years ago? Where would you be now? And the thing about what if is it kind of gets you nowhere, right? I mean, you can look at it and you can learn from it, but at the end of the day, Jeremy's right. You got to step up and go.
Tony, if I could piggyback off that, relationships, right?
Okay.
Tony's mentioned putting people together, relationships, how important are they? It's all about the next deal. And, so you focus on this one, give it your utmost attention as you should, because if you're borrowing people's money too. And Tony and I, the hard money lender, because of our students that we've worked with and trained, he said, if you get 10 flips under your belt, he'll give you a $5 million line of credit, was it, Tony? Or 2 million?
5.
I forget what it was. 5? Yeah. I think a $5 million line of credit after 10 deals with them. Imagine having $5 million line of credit just at your disposal whenever you need it for any deal. You think you can get more deals? Do you think your business, you could make it more scalable? So awesome. And I want to give a big shout out, Tony, we got Jason on here, one of our students who just sold his first fix and flip on Monday this week. So awesome. And I think he, if I butcher it, forgive me, I think he said he netted on that deal $42,000 up on that flip in Indianapolis. And he's in California, right? Enjoying the nice weather, right? Indianapolis, cold winter months, but you don't have to be there. You can do it remotely. And awesome job.
It. Proud of them. I love that. And for people on here that when you hear that $42,000, I will tell you this. The average gross profit flip last year, not our data, but 72,300. And some people go, I want to make this, right? And some people go, I'm okay if I just make 8,000. Well, you don't want to make 8,000 on a brick and mortar fix and flip. It's okay on a wholesale deal, but that $42,000. The way that we teach that particular strategy on a brick and mortar fix and flip, our range coming out of the gate is between $25,000 and $60,000. That is our sweet spot for students. That's where we want you to land on your first few deals. And then the reason why we say your first few deals is because once you get a couple deals under your belt, what's going to happen is your confidence is going to go up, and you're going to start looking at some bigger deals throughout the country. You don't want to do it right away. And I'll tell you what. I'll take a base hit all day long. I'll take a $25,000, $30,000, $45,000 deal all day long and just keep hitting it, right? And then every now and then you're going to get the big, we've had students make $300,000, $400,000 on deals. So stay with it, get started. Congratulations, Jason. That's awesome. Super, super proud of you. Oh, look, he made a comment there. Jeremy, I'm trying to stare at this thing. Can you see what he's saying?
Yes, he says, thank you both. He goes, no hard money lender on that one. They used some of his own funds, and he had a private money partner come in. So just like we're talking about, no money deals, if you have funds and you want it to see better returns, why not invest and control it? Who cares more about your money than you do? So awesome. And so thank you, Jason, for sharing that. And congratulations. Awesome. And many more, right? Coming. He has another one right now too up in Indianapolis, and he's anxious to get through that one too. And
well, we are right at our 6-minute warning here, and in the spirit of being on time, Jeremy, why don't you take that last question from Maritime here? And It's more of a comment, I think, than anything else, but she says, I'm still not confident yet with finding the ARV. Plus I have, she's not very computer savvy, so it scares her a little bit. Any advice on that?
Yeah, like anything, you gotta rip the Band-Aid off. First of all, you gotta recognize, okay, if this is my weakness and my computer skills, well, you just gotta put the time in, right? Just like all of us, when you started off on real estate, you didn't know anything about it. Well, how do you get better at it? By putting the time in, immerse yourself into it. So yes, the computer and ARV, none of us were confident on ARV in the beginning. None of us were. So what did we do now that I've evaluated, thousands of deals? Am I confident on my ARV? Absolutely, because I put my time in, right? Get the black belt. And yes, it's scary. We all we fear the unknown, don't we? I don't care what it is, we fear the unknown. Put the time in, and I promise you it gets easier and easier. But what happens, Tony? We see people that give up, quit on themselves before they get there. Yep, in all areas of life, not just real estate.
Seen that a lot, and and the other thing is not only giving up, but are kind of stuck in that fear place, maybe like you are, Maritime, and you have to just face it and do it. As scary as it is, as fearful as you are, you need to lean into it, and because that's where it starts. If I didn't get started, I wouldn't be here right now. And all of our students that we've ever trained, and we've trained a bunch of people in the past, and I'm so proud of them because, oh, you know, Jeremy and I both know how scary that can be. But at the end of the day, you know, if this is something you're wanting to do, you know what the results are going to be if you do it correctly, right? I know that part of the fear is not doing it correctly, but that goes back to the knowledge base. But once you arm yourself with a little bit of knowledge and confidence, you're not going to know everything right off the bat. There's certainly a lot of things that I still don't know that I always seek out other information. You know, Jeremy mentioned, you know, just kind of getting your reps in. When we kicked off our virtual training, we did this almost a year ago, a little over a year ago, and we didn't know anything about webinars. We didn't know anything about making sure Facebook ads are working and all the, you know, all these different things that are kind of behind the scenes to get it all together and putting PowerPoints up on a webinar like this and hosting people and all of it, right? And it took a lot of energy and a lot of effort. But it was something that we were very passionate about, and we wanted to do it. We divided and conquered, and some of you may not have that partner that you can lean on. But here's another kind of lesson there. When I got started, I didn't have a partner. I have a partner now that I trust and could depend on. He mentioned some wonderful things about me earlier, which I truly appreciate. That's one of the things that makes us very special, because partnerships are like marriages in a lot of ways. Sometimes they're even tougher. I'm blessed to not go through the drama with Jeremy, but you know, you go through good and bad times, right? And what we want to do is make sure that a bad time for you isn't losing money, right? It may not be making the $42,000. It may be making only the 25, but there's checks and balances built in. That's how we do it. That's how we teach it. Okay, what we're going to do right now is next week, Jeremy, we are going to be talking about cash flow properties.
Absolutely, my favorite avenue, how to do it still. You can do it no money out of pocket, why it's one of the safest avenues, and it's easier to find those deals right now in today's market. So some people, Tony and I have been coaching and mentoring people that sometimes they were maybe having trouble in their market with one avenue, but man, by shifting over to a different one, having that different arsenal to use, let's build a real estate portfolio, right? That's probably what you want to do here, right? Or replace your income and stuff. It doesn't happen overnight. It's by getting those reps in. And next week's a big one.
Cash flow, baby. It's one thing to make chunks of money. It's another thing to have it coming in. So we're going to be talking about that. So get the juices flowing. If you have any questions, write them down. Same time, same place next week. Let's have some fun. And any kind of questions out, because they kind of come in a little bit late here, but we're going to close it up. But write those questions down. Come back next week. As Jeremy mentioned, you can find us on Facebook at High Impact Outcomes. Go in there, like it, love it, want some more of it. Give us a shout out, and that'll close it out for us. Jeremy, I'll leave the last word with you, my man.
Oh, I'm just going to say, everyone, you know, appreciate your time being here, you know, because we don't take it lightly. And we love the participation, chiming in, all of those things too, guys. And remember, we're here for you. That's why we're doing this. We want to give back, help. And what did this cost you guys to be here? Nothing. So we want to give back, and please ask questions, use us, you know, use our, you know, years and years of experience and, you know, trial and error stuff we learned through the School of Hard Knocks, so you don't have to. And like Tony always says, be safe. We'll see you next week, and we'll sign off from there.
Okay, guys. Thanks, Jeremy. Have a great night, everybody. Bye-bye.
Thanks, Captain America.